We're living in an age where anyone holding assets is going to have a great time with financial returns, because if you don't own assets, your purchasing power is going to get obliterated over time.
Hi Talal.
Hello.
Welcome to Slow Days. How are you doing?
I'm doing good. Can't complain. Thank you so much for having me.
Of course, it's our pleasure. So, how's your day been today?
Well, it's been quite hectic. I've had quite a bit of work to finish up, and it's good to be able to take this break and come chat in a slightly more relaxed environment.
Speaking of the environment, can you tell us a little bit about why you choose the gray?
Honestly, we are a company that works from home or work remotely. Remote first is the best, most accurate description, because we do have offices in Dubai and Bahrain, but we use them sparingly. And I work from my home. I have like a small home office, but I do my meetings that don't require presentation and share screen and whatever in the gray.
Okay.
It's close to my house, and they have amazing coffee. Yeah, so and I'm a creature of habit, I guess. So I got invited there once for a meeting, and it's a bit hidden, like you can't figure it out exactly.
It's like a little bit of like a cocoon,
yes. I was impressed the first time I went there for a meeting. I just started replicating the same. I've been doing more of that, and I'm trying to do more of walking meetings with the client, but obviously you need to wait for the weather to be slightly better. But we have a client that is like, let's meet next to Fields, the coffee shop on Sunset Beach. I'm like, all right, sure. Do I come in pants, swing, like what type of meeting is this? Like, don't worry, it's a walking meeting.
Okay.
So basically, it was 45-minute meeting, and we went 20 minutes back and 20 minutes forth, and it's just a chit chat. But it's like an older guy, maybe 65 years old, and I've been saying I want to do more of that, but I haven't, and hopefully we'll do that once the weather gets better. But yeah, Gray is always good food, good drinks, and a bit hidden. So yeah, I like to come here a lot.
But it's really funny that you mentioned the walking meeting, because I've heard a few people talk about this, but of course it's too hot right now for us to be walking around in this heat. But do you think that that's like any different from like just a sit-down meeting?
Of course.
Do you think it's better?
You get your best ideas while you're moving.
Really?
I don't know about you, but I get most of my good ideas while I'm walking or running or while I'm on the move. I don't know if there's a clear scientific explanation for that.
Yeah.
But yeah, hopefully I'll do more of those walking meetings, and it helps also break the ice to some extent, I guess. Especially if it's obviously if you have a clear agenda and you have points you need to cross, you can't do that while walking, right?
Yeah.
It has to be a pretty casual meeting for it to work while you're on the go.
That's interesting. But you did mention that you were a remote first company, even though you've got physical offices here and in Bahrain. Why is it that you felt the need to work remotely and to encourage that within your team? Because I would imagine it does make sense for a small team or a big team to have that sense of physicality, to collaborate, especially like if there's things that are on the go or if there's things that need to be tended to in the moment. But to go remote, why did you make that move?
To be completely honest, it is we didn't really make that decision. We started CoinMENA in February 2020, when was prime time COVID.
It was peak COVID, yes.
We didn't really have a choice. Even if we wanted to go. Actually, before that, I take it back. In 2020, we formalized it, but we started working in 2019. And Dina and I used to work from an office in Business Bay. So technically, we started from office. We didn't really go punch in, punch out kind of thing, but we did have an office. It was not a very nice office. It's interesting looking back. It was just like one big room, and it's all filled with our team. But I guess looking back, we started off with a remote setup, and then that lasted a few months. Then COVID hit, and we went remote, and remote worked. And we realized that it's an excellent way to give your team something they want. So what's my job as CEO? It is to obviously maximize shareholder value. That's the main thing. But you need to be to hire top quality people, retain them, and give them a productive environment for work. So I realized that if we were to allow our team members to work from home, we would have a competitive edge against other companies. And the downside of remote work is you have people that coast, people that do the illusion of work and not actually do the work. So I said, okay, if that is the issue, then how do we mitigate it? And the way to mitigate it is very easy, and it's too easy to a point where it sounds stupid, but you have to be understaffed.
Okay.
If you are understaffed and you work remotely, then your work is going to be efficient, or it's not going to work.
Yeah.
Be one or the other. It's either going to be efficient or you're going to end up with gaps. But I prefer that rather than having people just for the illusion of work. I remember when I was a consultant, I used to have one of my colleagues next to me. He was quite lazy, one of the laziest people I've ever worked with, and he would just show up to office and show the illusion of work for several hours, shut down, leave. But in my mind, I'm like, if I ever start a company, I need to make sure how I avoid people like that, because to our managers, it's like, okay, our work is ongoing, but in reality, he's just doing the absolute minimum to not get fired. And it's easy to do that in an office because you can show up on time, leave on time. But in a remote setup, you are based on your merits, on your achievements, on your outputs. Obviously, everything has advantages and disadvantages. I think team collaboration is easier in person for brainstorming, but execution is easier remotely.
So, Talal, we were doing a little bit of chit-chatting before we actually were going to roll, and you seem like a really optimistic person. And optimistic in the sense that you're optimistic about two things that I could understand. You're really crypto forward, and more importantly, you're very Bitcoin forward. You're very bullish about Bitcoin. Now, we're all aware that there's all kinds of people in the crypto ecosystem. There's people who are enthusiasts, there are just people who are slightly curious and just maybe want to dabble with the idea, maybe entertain it, and then there's people who are just skeptical and dismiss it completely. When you're confronted with these kinds of tropes of people, how is it that you pass on your vision as somebody who's very, very bullish?
Interesting spectrum that you portrayed there. I think my sister tells me that you definitely classify as a crypto bro.
You do.
And okay, sure. I will take that, hopefully with a positive connotation. Honestly, I can't think of how I wouldn't be bullish on Bitcoin. People ask me, how are you so bullish on Bitcoin? And when I think about it, I can't imagine a scenario where I'm not as bullish. There are so many things happening in the world that lead me to the outcome that Bitcoin is going to be the way that people store value for the foreseeable future. Because everything in our world has been flipped head over heels except for money. Why? Because governments used to control it. And now with Bitcoin, we got money that is not purely controlled by governments, similar to gold. So why did people trust gold for thousands and thousands of years? Because governments that have absolute control corrupt absolutely. So if you have the world reserve currency, like the dollar, like the Brits before it, like the French before it, like the Roman Empire, they abuse it. And they abuse it to a point where they essentially have expenses that they can't afford. But since they have the world reserve currency, they can create more money. And once they create more money, they can pay off any of those expenses at the negative impact of anyone that's holding their currency. Because let's say we only have these two coffees in all of Dubai, then this would be very valuable. But if there is a billion coffees, it dilutes the importance of our coffee. So I guess that's, I can't imagine a world where I'm not as bullish on Bitcoin. And I'm happy to be, I guess before I got married, I told my wife, listen, I don't own anything else. I don't have real estate, I don't have dollars, I only have Bitcoin. And felt that I had the ability to take a bet on Bitcoin. Because what's the worst that could happen? Bitcoin goes to zero. All right, sure, I'm not gonna go hungry. I will go find another job and will make a salary to be able to pay off my expenses. But I would have never been able to forgive myself knowing that I saw the Bitcoin opportunity and did not take it with everything that I have. But going back to your question on how do I deal with those different types of people, previously, in the past, I used to be a lot more pushy. Why don't you understand, blah, blah, blah. Now it's khalas, Now I don't have to make the point as strong. Bitcoin's trading at $108,000. So it doesn't matter what I say, it doesn't matter what anyone says. Then what matters is the market decides who is right and who is wrong. And market has decided that people that have invested in Bitcoin over the long term were actually right in their analysis. So I guess this is not investment advice, but to show you like how my thinking is and how bullish I am, I think within 5 to 10 years, Bitcoin will supersede gold. And for Bitcoin to supersede gold, we're going to need to trade at about $800,000 per Bitcoin. So when people ask me, oh, you're still buying? And I buy Bitcoin every Thursday. And it doesn't matter if I'm buying I bought at 123, for example, when it was all-time high recently. Fine, I'm down on it. But if I believe that Bitcoin is going to be trading at 800,000, then buying it at 110 or 120 is a minimal error. And every generation has a specific asset class that allows a select group of people to absolutely make it. And our parents' age was landowners.
Yeah.
Like if you look at your group of friends, contacts, relatives, most of the rich people we know from the older generation, I forgot which boomers, I think they would fall under the boomer category. Most boomers are rich because they bought land or real estate with leverage. What does that mean? They put $100,000 down or $50,000 down on a house, and they took a mortgage over 20 years, 30 years. So they took leverage. They bet with more than what they had, and they picked an asset that shot up in demand and shot up in price. So Manhattan, Riyadh, Dubai, London, Tokyo, any prime location where you had a huge influx of people wanting to live, any landowner or real estate owner made generational wealth.
Yeah.
And our age, the generation before the real estate owners was gold. So if you think of the gold rush in California, when they figured out, there's many people that sold picks and shovels. So they used to say it's when there is a bubble, you should sell picks and shovels. Don't focus on like what we're doing with CoinMENA. We're selling picks and shovels. Crypto goes up, crypto goes down. We make our commission based on the trade.
Yeah.
But me as Talal, I'm buying the asset itself, which is Bitcoin. And that is because I think every generation has an asset class that allows them to separate themselves between the rest. And there's multiple dynamics that go into play that force me to invest pretty much all my savings into Bitcoin, even until today. And I guess I mentioned the money printing one, but a simpler one is allocation of money. So if you think of who controls decisions on money today, it's almost still the boomers.
Yeah.
In some cases, you have handover to the younger generation, etc. If the older generation was holding 40% in bonds and 10% in gold, you think they're going to keep that? Of course not. The new generation is going to come like, oh, what were my parents investing in? Real estate, stocks, gold, bonds. Oh, no, Bitcoin? Let's add some Bitcoin to the mix.
Yeah.
So basically, the newer generation, once they start managing their family's money, and this is something called the generational wealth transfer, this is going to have a massive impact on how much money goes into Bitcoin. And I know a lot of people that have basically saved their lives and the lives of their families through Bitcoin. Someone living in New York or London doesn't really see that because Bitcoin was not necessarily going to save people that are already living in well-established financial centers. But someone that was living in Syria or Lebanon or Argentina would have literally gotten their assets completely wiped out. Since the year 2000, the Egyptian pound is down over 93%. You know how much 93% is? That's an A+ in school, something that we barely used to see on 93% down. So like, if you could afford something worth 100, you can now afford something worth 7. It's absolutely insane. And even if you have dollars, if you had dollars in Lebanon, which meant that you didn't take the hit of the value of the currency, you couldn't send your dollars out. What kind of insanity is that? So I think the newer generation is going to realize, why would I trust something that has messed up so badly over the years? Which is, I'm referring to the banking system mainly, in many markets around the world. Fiat currency inflates at about 7 or 8% annually, and this is all of them in aggregate.
Yeah.
So the money supply globally is increasing by 7 to 8%. Obviously, dollar and euro increase slightly less, but something like Turkish lira, Egyptian pounds, those are growing at sometimes 20, 30% per year. And if I want to give a more balanced view, I'm bullish on anything that cannot be artificially created. And what does I mean by artificially created? So let's say me and you, we own a company.
Yeah.
And this company is doing well. What are we going to do? We're going to create more shares to sell them to the public to benefit from this price increase. And it's very easy for me to write a letter to increase shares in a company. Debt, US debt. the US has $35 trillion in debt. If it goes from 35 to 40, who's keeping tabs? Like, if I have a loan from a bank in Dubai for $1 million, can I go tell them, hey, I want to increase it to 5? Of course not. They're going to say, hey, you have a loan for $1 million and you're bankrupt. Why would I give you for 5?
Yeah.
But the US government can do that. But I guess that's also another very important reason on why I'm bullish on assets like gold, real estate, Bitcoin, even commodities, things like silver, wheat. All of those are going to do very well in the coming years. We're living in an age where anyone holding assets is going to have a great time with financial returns, because if you don't own assets, your purchasing power is going to get obliterated over time.
Now, you did mention gold and how you're bullish on gold as well. So in 2025, if I had to ask you, where would you park your money? Would you do it in BTC or would it be gold? Or would it be a combination?
How old is the person I'm asking? Because it makes a very big difference. If someone is young and still has high risk appetite, then invest in Bitcoin. If someone is older, then gold probably a better answer.
Really?
Yeah, I mean, the way that I see it is gold and Bitcoin both have been ways to protect purchasing power and sovereignty. Mm-hmm. So in many countries around the world, when trust in government is low, people stock up on gold and they store it at home.
Right.
The value of gold cannot be debased. And the definition of debasement is I create more of something to dilute that. Mm-hmm. We can't create gold out of thin air.
Yeah.
So that's why people used to save in gold for a long time. And sovereignty. If the gold is sitting at some bank, or if you have dollars in a bank, the Fed can say, hey, you know what? This person, block them. With gold, you don't have that. You have sovereignty over your assets. So Bitcoin and gold both serve as the same purpose. And I guess central banks have been buying gold for the past, I don't know how long, and they've really ramped it up the past years. And I think it's only a matter of time until we see, now El Salvador owns a good amount of Bitcoin. Bhutan also owns, I think, 1 billion, if not more. And I think it's only a matter of time until we see governments around the world start to stock up on Bitcoin.
So then by that definition, does that mean that there's also a finite number of Bitcoins?
Yes.
Really?
Yeah.
So is there like a math to it?
Of course. The most beautiful thing about Bitcoin, or one of the most beautiful things about Bitcoin, is its monetary policy, and it is programmed by code. So Bitcoin's monetary policy is something that is extremely important, because let me give you an overview of Bitcoin's monetary policy. When Bitcoin was first created in 2009, there was 1 million Bitcoin that were created in what's known as the Genesis block. So the creator of Bitcoin has 1 million Bitcoin stuck that have never moved. Mm-hmm. And then it's called the blockchain because it moves block by block.
Yeah.
And every block, there is a new amount of Bitcoin that is distributed to the miners that have helped verify this set of transactions. So every block, new Bitcoin is given out. In 2009, the amount was 50 Bitcoin. 50 Bitcoin is given away every block. Mm-hmm. And every 4 years, this number is cut in half.
Okay.
So today, the amount is 450 Bitcoin per day. If you look a few years down the line, it will go from 450 to 225.
Yeah.
Why? Because it's basically cut in half. So in after 120 or 130 years, Bitcoin will peak at 21 million Bitcoins.
Okay.
There will only ever be 21 million Bitcoins.
Never more.
Never more. And today there is, I think, 18.5 million in circulation already.
Okay.
That means over 90% of the Bitcoin is already minted and out, available to buy and sell.
Okay.
I guess one thing that's absolutely crazy is if I asked you, what is the amount of dollars that's going to be in the world at the end of this year? No one knows.
Yeah, no one knows the answer. I don't think the Fed knows the answer.
The Fed doesn't know. The Fed will change their opinion, or they will adjust to that. So I guess with Bitcoin, the monetary supply has never been adjusted. Mm-hmm. It's programmatic and it decays over time. So the chart looks something like this. Mm-hmm. It started off with 1 million, 50 given out every block, and it keeps getting cut in half until we reach the final halving. And this is Bitcoin's programmatic monetary policy, which is something that we've never seen ever in the world. Mm-hmm. We have never seen anything that is digital and scarce. Let me try to unpack that idea a little bit.
Yeah.
If I have a picture on my phone and I send it to you,
Yeah.
then I have a copy and you have a copy.
Yes.
I cannot definitively send you the picture from my phone to your phone, even if I delete it. It will be in my deleted pictures or whatever. It's okay if this is done on a picture. But imagine I was doing this for money and I could send you money and send Sajini money, but I also keep the money with me. It doesn't work. That's why historically we used to use intermediaries like Emirates MBD, Fab, others, to make sure that if I send you the money or if I send Sajini the money, I can no longer send it out. So with Bitcoin, for the first time ever, we had something that is digital and scarce. Meaning if I send it to you, I no longer have possession or ownership of it. So this thing on its own is, again, why Bitcoin is so popular and is the most important invention of our generation.
When was the first time that you were introduced to Bitcoin?
Introduced is an interesting word because the first time I heard about it, I said, man, don't bother me with this stuff, please. I have enough
because
stuff
you were in
to do.
Consulting. I'm sure it was a word that was thrown around, right?
Yeah, no, I was in consulting. I got to know about Bitcoin before consulting. So I first heard about it in university, and I didn't give it too much attention. But that was early on. That was maybe 2012.
Okay.
In 2014 was the first time that I ever got gifted Bitcoin. And Hashim, props to you, my younger brother. He was in university and they got a visiting professor called Bruce Fenton, who's like a executive director or whatever at the Bitcoin Foundation. And he was a visiting lecturer to his university, Bentley University in the US. And he told the class, listen, we're not gonna do anything today, nothing about class, but I need you all to set up a wallet on something called blockchain.com. Back in the day, there was a very popular wallet called blockchain.com. I think now the new generation of crypto bros and sisters don't really know it, but blockchain.com was the main wallet to use at some point in time. And he basically asked everyone in class to open a wallet, send the address, and he sent them, I think, $2 of Bitcoin each. And my brother called me up, was like, remember this thing called Bitcoin? Yeah, well, my professor just helped me set up a wallet, blah, blah, blah. And that got me back into the rabbit hole. And I guess since that day, I've been working on it pretty much every day.
You know, there's something I've been meaning to ask you since we've been talking about different asset classes. There's this very strange dichotomy in the region where we keep hearing about the fact that the region's youth, so millennials, Gen Z, we're the most tech savvy in the world. We've got one of the highest percentages. Nearly 70% of our youth is tech savvy or prefers to use the most cutting edge tech when it comes to their goods and services and is the most bullish about it, if we were to put it that way. But there's also 40% of the Middle East that's unbanked. Do you think that crypto in any way could fit into this sort of absurd gap and fix that problem?
Yeah, I mean, it's very interesting that we call them unbanked and to become banked. They will never become banked.
Okay.
And the reason is banks have high compliance cost. If you go to a bank and you tell them, hey, I have a salary of 1,000 dirhams, can you open an account? You know what they'll tell you? They'll tell you absolutely not.
Yeah.
Because they need to have minimum 10,000 dirhams for it to justify their costs. So I don't think these people will get banked. They will start to use USDT as they are doing today. So I guess I imagine that the future of finance will be very much mobile phone centric, and it will be applications that use stable coins for payments, for salaries, for borrowing, lending. So I think we're embarking on a new financial system that is powered by stable coins and crypto assets. So it won't be banks that are offering them the services. It will be, like, I'm sure many people have Binance accounts but don't have bank accounts, and they live their life with paying in USDT, receiving money in USDT, and that is, I guess Binance is more of a trading app. We're moving more towards the latter, which is being able to provide financial services built on crypto rails.
Okay. And what does that look like, building financial services on crypto
rails? So the way that I imagine this to work is, if I go to the mass public and I tell them you need to manage your private key, and if you lose your private key, your money's gone, it's like, hey.
Yeah, it's really tedious.
I don't need drama. But if you have a username, password, and customer service agent, and a centralized service like CoinMENA that can give you access to the world of crypto, then I think that's the future. So today we're an app that allows you to buy and sell and trade, deposit, withdraw. But in the future, we're going to issue a CoinMENA card that allows you to spend even to buy coffee here, You'll start be able to borrow, you'll be able to lend. So any service you can get at your bank, we will find a similar financial service to do using crypto. And that is really where I see the majority of innovation and upside coming in.
So do you see there's more of a retail push for crypto when it comes to these kinds of services becoming more accessible?
Both, wallah, both. It's crypto, it's retail and corporates. And actually we're seeing a lot more growth from the corporate side.
Okay.
And they're moving some of their holdings to Bitcoin, to gold, to other types of hard assets. And then we also see other companies using stable coins to manage their treasury and FX and liquidity. Because if your wire transfer takes a few days to settle and clear, well, your USDT transfer is settling on the spot. So for businesses that are heavily contingent on their working capital and need to manage their cash flow, stable coins provides a much more efficient medium of managing your money.
Then I gotta ask you, do you think there's, in probably the next 5 to 7 years, there's going to be a similar like one-tap revolution on crypto as there has been in the last couple of... Cards, yeah.
Yeah. I think in some parts of the world, like the US, it's kind of there.
Yeah.
Coinbase has an Amex where you spend and you get Bitcoin back. So yeah, I think we will see that sooner than 5 to 7 years.
Okay, and do you think that there's enough of a regulatory framework to manage something like that? Because while I think that's a very ambitious goal, I'm guessing that there's a lot of back and forth that needs to happen on the compliance side of things.
Yes, of course. But that is why the UAE and Bahrain have established themselves as global leaders when it comes to this. So VARA, their framework that they've set up, ADGM and the framework they've set up, Central Bank of Bahrain, those all provide very clear licensed activities that allow you to innovate yet address and protect customer interest. Because if you think of FTX was a massive disaster. Like tens of billions of dollars got lost, and they were the sponsors of the Miami Heat Stadium, and they got all the social proofing needed for people to trust them.
Yeah.
Bill Clinton used to speak at their events, or Steph Curry, or Tom Brady. Like they got all the...
So they were seemingly legit.
They were seemingly legit, but they were regulated in Bahamas. And Bahamas is not necessarily known for their robust regulatory framework. So I guess I say this point to show that not all regulators are the same. Like if you have a license from Bahamas or if you have a license from Seychelles, it's not the same as a license from Dubai or Bahrain. I think, this is something that investors will place more importance on as they go. And okay, I'm dealing with this regulated entity, where is it regulated? But in the UAE and Bahrain, I do think that the regulatory ecosystem and frameworks are excellent, and that's why we've seen huge traction. If you think there is 36 companies licensed under VARA, and this was established only several years ago. So not only do I think that they did a great job, the results also show the same.
Now, when we talk about regulators in the Middle East, there's obviously also the Sharia compliance angle to these things. Now, does that, where does that actually work when it comes to setting up an exchange or a product base? Does that interfere with innovators like yourself?
Yeah, so Anna, I have a very strong opinion that's only for me as Talal, and I don't speak on behalf of my company or anyone on this. But I do think that Bitcoin is probably the closest form of halal money we've seen since gold.
Okay.
Because today the dollar is not halal. Anyone that tries to argue that is either pretending not to understand, or dollar is literally a debt-based system. It's interest-based.
Yes.
They issue treasury bills, they have interest, and that's how dollars are not Sharia compliant. So how can you have Sharia compliant finance if the asset itself you're using is dollars? Because dollars in and of itself, the way that it's designed, cannot possibly be Sharia compliant. So gold is Sharia compliant, doesn't have usury, it doesn't have riba, it's not a ribawi system. So with Bitcoin, similar to gold, it does have the properties that allow it to be Sharia compliant. But moving on to the exchange itself, you have exchanges that provide leverage, margin, yield. We don't have any of those at CoinMENA. So if someone wants a Sharia compliant process, they're more than happy to work with us or other companies that don't offer such products. But yeah, it's interesting to see the intersection between crypto and Sharia, because to me, Ethereum staking is Sharia compliant, and I'll explain why. In bonds, it's not Sharia compliant because you are essentially paying interest, which as per Sharia and Islamic finance is not allowed.
Yeah.
What is allowed? Something called musharake, or where you win together and you lose together. So if I'm staking on Ethereum, I get paid 3 or 4% yield. But is that Sharia compliant? In my opinion, it is. Why? Because I get this 3 or 4% if I do my job correctly, which is validate transactions. And if I don't validate transactions, my principal can get eaten up in. So with bonds, your $100 that you came in is guaranteed, and you get paid interest on top of that. That is not Sharia compliant. But if you're doing staking, then your $100 you put in, you get 3 or 4% if you do your job properly. But if you don't do your job properly, your capital gets eaten up in, which means that it is closer to a profit and loss situation, which allows it to become Sharia compliant. This is a very interesting intersection, and I have not been able to find any scholar that has shown a comprehensive overview of the difference between Bitcoin, gold, and other fiat currencies. And I think it's a topic that people might not be very open to discussing because, I guess dollar is, in my opinion, cannot be possibly Sharia compliant.
Yeah. Now, if we were to talk about the ordinary novice, even retail investor, and say they're crypto curious, how would you suggest they start off?
Start.
How?
Just start. Well, that's
Where?
How? Where CoinMENA? This is an easy plug.
There we go.
But in my opinion, with crypto, one of the interesting things is you can buy with like 5 dirhams, 10 dirhams. So, and if you sign up on CoinMENA, you can get $5 for free. So the first, you can buy Bitcoin worth 18 dirhams just by signing up with your Emirates ID and that. So how? I've given you the exact way. Go to our social media page. You will be directed to signing up, and you can buy your first $5 worth of Bitcoin on our expense. And this is the thing, you can read, you can research, but there is nothing like trying it out yourself. So that's my advice is lift up your sleeves and get working. And you can do it with a couple of dollars worth or 10 dirhams, 20 dirhams. It doesn't have to be a big amount. And by getting off zero, you start getting yourself familiar, you start getting interested, you start following price. And that's the way to go.
Well, then in that case, of course, just starting is great advice. But for somebody who probably wants to read a little bit.
The Bitcoin Standard.
Okay.
The Bitcoin Standard is a very Bitcoin-specific book. The author is very Bitcoin-centric, not looking at the other side of crypto. I agree with him that Bitcoin is the best form of money. Doesn't mean that I agree with him on the other types of assets, because even though they're not money, they can act as other financial assets. So I do agree that Bitcoin has to be separated from other crypto. Like other crypto comes with very different risk and return versus Bitcoin. But for Bitcoin, the best book to read is the Bitcoin Standard for sure.
Okay, so I think explaining these things to somebody like me who's younger would, I think, be easier, because I invest in crypto as well. So for me, half the job is done. Like, I believe in it. But say you had to use similar methods to probably convert somebody who is a boomer or Gen X who believes in more traditional asset classes like real estate or gold. How are you going to convince them that, hey, if you got a couple of dollars to spare, this is something worth trying out?
There's different approaches to this, and I think the most effective one, funnily enough, obviously we don't use this in the pitch, but it's basically, this is from Chamath, the ex-Facebook growth guy from Sri Lanka, and he calls it schmuck insurance.
Okay.
And schmuck insurance is, you don't want to be the schmuck that didn't invest in Bitcoin when it hits $1 million. So
it's like you snooze, you lose.
I guess there's another saying, everyone buys Bitcoin at the price they deserve. Some bankers say, it's never going to work. So it's a test to their arrogance. At what point will you realize that you have been incorrect in your analysis and you change your word? Like Larry Fink is one of the most admiring, financial people in my opinion, because he used to be very against Bitcoin. And now he has the most successful product launch in the history of finance. The BlackRock ETF, IBIT, is literally not the most successful crypto product. It's the most successful financial product of all human history. It's insane that this guy, several years ago, was against Bitcoin. Michael Saylor, who has about 600,000 Bitcoin, 3% of the total supply. He's the largest holder of Bitcoin after Satoshi. in 2014, he used to say Bitcoin is going to suffer the same fate as online gambling. At that point, online gambling was really struggling in the US. And now he changed his opinion and is super bullish. So I guess I really respect anyone that works in traditional finance that has had the humbleness and the foresight to be able to have an opinion against Bitcoin because it seems new, it seems sketchy at first, and then once you study it, you realize, oh shit, there's lots of value behind it, and you change your course.
Now, if I had to bring this conversation to a close, although I really wouldn't want to, considering this is truly like a wealth of knowledge coming my way, I would like to illuminate you with something. In a podcast that you did about 3 years ago, roughly 3 years ago, you said, and I quote, "It's impossible for you to function in today's world if you refuse to use the internet. It's the same with crypto." Now, what does that mean for the future of money when such a disruptive asset class becomes the new norm?
Yeah, so I am sometimes wrong, but I don't think I'm wrong in this one. Partially wrong, maybe actually I have a friend that's operating without the internet for this year, and it's a very interesting experiment where like no internet for a year, but that's a bit extreme.
Have you heard from them?
No, there's no internet.
Yeah. No letters?
No, WhatsApp or other, I'm not gonna do. I guess today, if you don't want to interact with crypto, it is to some extent your choice. It won't be your choice soon. And what do I mean by that? Once there is, actually maybe today, even today, actually everyone in the world, or not everyone, if you're working in finance, you cannot avoid Bitcoin. I'll give you an example. If you own the S&P, which is the most popular product people are buying, right?
Yeah.
By owning the S&P, you indirectly own Bitcoin. Because the S&P has Tesla. Tesla owns $1.5 billion of Bitcoin. So every S&P owner indirectly owns Bitcoin. So technically, you will be part of it whether you like it or not. And I think Bitcoin will become something or crypto and Bitcoin will become something that's a bit more invisible. And when I say invisible, I mean, like, we all now use the internet, but do you ever ask anyone, what do you do? It's like, yeah, I work in the internet industry. That's not something you answer, right? Today we answer, yes, we work in crypto, but down the line, no one's gonna answer it like that. You know, you will be working in finance and you use crypto in the back end. You're working in marketing, ads, whatever, and you have crypto working in the back end. So it'll become more of an enabler rather than one just segment. It'll become cross-industry.
So it's just gonna become like an invisible network of sorts.
Sure, yeah. I mean, there's some parts of crypto that will be more infrastructure, like Swift today. You know,
yeah.
On a day-to-day basis, unless you're working as a payment officer, you don't deal with Swift. But it's what makes money move around the world today. Similarly, in 10 years, people are not going to notice what network is doing it. Or if I asked you now, the internet protocols, are you TCP/IP? Is anyone interacting with it? You interact with it every day, but you just don't know that you are.
Yeah.
So in that sense, I think crypto will become more of a settlement layer, and it will become cross-industry. That's how I think it will play out. You know, you will not be able to function. Going back to my quote, you'll not be able to function if you want to completely exclude crypto. Previously, it was possible. You could live a standard life without interacting with crypto. As we progress, I don't think it's going to be possible.
Well, I think we've made some bold claims here today, and honestly, you've given us quite a bit of food for thought, so thank you for that. It was lovely chatting with you, Talal. Thank you so much for coming on Slow Days. And I hear that you do have a little bit of a sweet tooth, so that tart is all yours.
Thanks again for having me. Yeah, I guess for the bold claims, nothing is investment advice. I guess to me, important to try and predict what things are going to look like so that you try to get your business and your investments directed in that way, because that's how you make crazy upsides. If you try to predict where things are going and you build in that direction, you'll be able to capitalize on the flows if your thoughts actually materialize.
Well, I hope whoever's listening to this is taking notes, because, well, if they listen to half of what you've said, they're going to be very wealthy in the next 5 to 10 years.
Not investment advice, but yes, thank you so much. And it's a pleasure being with you on the interview.
It was lovely speaking to you today.